Hey, it's Andrew here. Today, what I want to talk about is San Diego's home prices and the market. Just a couple days ago, I shared a report that put San Diego in the top 10 for most overpriced places to live. And I want to show you guys something that's pretty exciting. So I started looking at some stats and I wanted to just show you. So if we look at California and San Diego specifically, it's incredible what the home prices are doing. Now, home prices could be different in all parts of California, all parts of the country. We are in one of the most desirable cities that there is across the country. So when we look at this, I want to show you that home prices here in San Diego have surpassed the crazy prices that we saw during COVID. So currently, the median home price is right about $865,000. That is crazy. That is a lot of money. We're gonna skip the year over year, but I wanna go back to May of 2022. So in May 2020, we're at 855. That was the peak of COVID. And we're already surpassing that. During COVID, interest rates were in the low threes, in the twos. We did a refinance into the twos during COVID. So our home prices have surpassed COVID prices with rates in the sevens. You can see this graph. It dropped and then it climbed back up. But this last 6 months, we've been dealing with rates in the sevens and eights. So what's driving this? It is just phenomenal. Now, next thing I wanted to look at here is actual active time on the market. So I think this plays an interesting picture. And, currently we're sitting right around 25, 26 days of active time on the market. That's fast. That's super fast. Especially when we get to it, there's not much inventory, and I'll show you. But in that same time frame, back in May of 2022, you can see that the days on market dropped way down to 17, 10 days faster. Now, if you remember, we had people waiting in lines to get in open houses back then. It was wild. So only being 9, 10 days longer right now with what I will call a calmer buyers, 27, 28 days, 26 days is not that big of a deal. And it's less than a month. So if you need to sell your house, it's likely that if it's in good condition and it can show well, that you can get into contract within a month. So you've got 2 to 3 weeks of prep work, and then you've got about a month of market time. And then you've got escrow. You could be sold and moved on to wherever you need to be in 60 to 70 days. That's impressive. And if we look at home prices, you could potentially get the most money for your house that you've ever been able to here in San Diego County. Let's also look at the sold data. Just last month, we sold just over 2,000 homes. Now, home prices are the highest they've ever been. So maybe that's the problem, right? Also, rates are fluctuating very close to the highest they've ever been. I believe they're in the sevens right now. We're gonna check. We hit eights just a few months ago. That's definitely gonna play into homes not selling. People aren't gonna buy, so a home doesn't sell. Less people are gonna sell because they don't want to take an 8% rate on their new house. So we sold about 2,000 homes just this last March. If we go back to that same time in May 2022, when home prices were right about the same prices where we're at, and interest rates were in the twos and threes, they sold almost 3,000 homes, 3,100. That means we sold a third less homes this month than we did back in a similar priced market. But that's with 2 or 3% interest rates. We're 4 times higher now. If you got a rate in the twos and you're getting one in the eights right now, that's 4 times higher. That's insane. But somehow we're still closing 66% of the same houses. This is a very strong market. Can we sustain these numbers, especially that home price? So we had about 3,500 active listings this past month in March. And then if we look at that May, June time frame of 2022, even back then, even back in May, where prices were screaming up, people were still at home, had nothing to do except buy real estate apparently. They had 4,000 active listings versus the 3,500. So not a lot different, but you can see in this graph that that May timeframe isn't the peak. So it actually jumped up to about 5,600. So if we take that 5,600 compared to 35, out of every 10 homes on a list, you're taking 4 of those away. That's how the inventory and the options for buying is being destroyed. Can you imagine as a seller that you're in a good situation to get that highest price for your house that it's ever sold for here in San Diego, like the average that we're seeing right now? That's why home prices are going up, because there is no inventory. There is nothing. And we're seeing people starting this bidding wars again, starting to waive appraisals, starting to waive contingencies, offering way over list price. What do you think is going to happen when interest rates drop into the, let's say, mid 5s, which we might see in 2025? I don't know. But this is pretty interesting data. We got ranked in that top 10 for most overpriced places to live. From the data that I just showed you, at least pricing, we are definitely not going backwards. So if you're on the fence about buying a home, the graph that we need to be looking at with you is the sale price. This graph, if you look at it, there's only one point in the last 3 years that even got close. We thought 2022 was crazy, but somehow we've maintained, and rates have only gotten higher. They're 4 times higher than they were when we last got this high in home prices. So if you're on the fence about buying, you gotta get serious, because the price you pay for a home today in San Diego could be the lowest it ever is again. The other thing that we've got to talk about is these 7% interest rates. And it's incredibly difficult to buy an $855,000 home when you're getting a 7% interest rate. Now, the good news in that scenario is that rates potentially will come down. Most likely they will. We have been told 3 times this year, then some of those have been taken away. We're still hearing that maybe there'll be another one. What I believe is that this next 1 or 2 drops is not gonna be significant. But in 2025, we could see rates in the 5s again. And I believe the market likes rates in the 5s. That's a comfortable place. Are we gonna get down to the 3s again, 2s? I don't think we're ever gonna see those again. It's not necessary, as this data is proven. So if you're interested in finding out more about buying a house, selling your house in this amazing seller's market, or getting a home loan that we can deal with this and then plan for refinance as soon as rates make sense, you want to get in, buy a house now, start building equity, realize you're going to pay a little bit higher interest rate, but paying a higher interest rate for a few months, in my opinion, is much better than paying $50,000, $60,000, $70,000 over list price. And that's what's going to happen if you wait until rates actually drop into the 5s. We will have 3, 4 times as many buyers out frantically trying to find houses. We'll see something just like we did with COVID. It's going to be madness. So if you're thinking that you can buy, it is a wise purchasing decision to try and get in now and avoid the hassles of multiple counteroffers and potentially having to overpay up front. If you win a bid on an overpriced house, you're going to have to pay the gap between the appraisal and the purchase price in cash at closing. That to me is much more painful than paying an extra couple $100 a month for a few years. What's the difference of paying out $10,000 in extra in interest versus $40,000 extra at the price of your home? I guess the math is up to you. If you want help with this, have questions, please reach out. If you have questions about this data and why I look at it the way I do, reach out. I'd love to hear your opinions.